We have a very special guest on today, Joshua Frank. He's joining us from Crypto Bahamas. Looking nice, man, looking tan. Joshua is the co-founder and CEO of the TIE, which is a leading provider of digital asset research to hedge funds, research firms, trading platforms, you name it. Josh, man, I appreciate you being on the show today.
Thanks for having me. I look great, a little frozen there, so I apologize, guys. The Bahamian Wi-Fi's got me.
No, I think it looked good. They're making it work, man. I just appreciate you taking the time away from all the fun there. So we're going to get into that in a bit, but I want to talk to you about the TIE. First of all, how did you come up with the name and what inspired you to create the company?
Yeah, I mean, the name is not necessarily it's kind of a long story. I basically couldn't come up with a name, and somebody suggested the Trusted Information Exchange. And I was like, who is going to trust a company with the name Trusted in their name? Anyways, went to register the name of the company. And apparently there's some securities and other laws in the US where you can't use the word trusted or exchange in your name. So we just became the TIE. But I guess you can say we're tying data and information together. But basically the impetus or the idea behind the company, or what the company has kind of become over the last few years, is really the fact that if you went out to hedge funds, institutions in crypto, and you asked 10 different hedge funds how they stayed on top of the market, every single one of them gave you a totally different answer, right? Mm-hmm. Everyone says they waste their entire life on Twitter and Discord and Telegram, but the other tools and technologies and pieces of information that they're looking at, all differ. And so today, I know you guys mentioned research. That's certainly a piece of what we have, but we're actually the leading workflow solution for institutions, or data terminal. So we have a data platform that has everything from market data to derivatives data to news to sentiment data, to on-chain data, to research, really, anything that an institution needs to see. And so our clients are the largest funds in the entire world. And they're traders, analysts, PMs, CIOs are spending, 2, 4, 8 hours of their day, basically staying on top of the market in a singular interface instead of going to, 50 different websites.
When I first heard about your product, I was doing some research yesterday, and I'm like, did this guy just make like a Twitter copycat here? He just be scrolling through Twitter on the platform. But like you mentioned, you're not just tying in Twitter, but you got Telegram, you got Discord. I mean, there's a lot of information.
Twitter is what we do from Twitter isn't actually showing you raw tweets. It's showing you aggregated, quantified investor emotion. So, for example, how many tweets are there in a particular day about a particular asset? What is the percentage of those that are positive or negative? How many unique accounts is that coming for? What are the, how does that diverge versus average? But we're looking at everything from an on and off chain perspective. So for example, we can help you understand what's actually going on the blockchain. So from like an Ethereum perspective, we can show you which smart contracts are the hottest. So for example, there was a big hack about 2 weeks ago, and we found that Tornado Cash was the hottest contract, which was people trying to launder money after it was hacked, right? And so we have all that data. We track news in real time. So we track SEC filings, court cases, regulatory rulings, but really anything the most sophisticated investors need to see in a single interface.
That's awesome. Yeah, it sounds like a really cool product. Actually, I think eToro even offers it. So that's really cool. Definitely have to make your own decisions based on your investment needs, but it's really cool that you're offering this. It kind of sounds like the Bloomberg of crypto. I think that's what I heard being thrown around, the Bloomberg of crypto. How do you think you differentiate from the traditional financial information sources like Bloomberg?
Yeah, so in terms of eToro, eToro actually, there's a copy portfolio we built a few years ago using one of the data sets, a sentiment one, and that's certainly available on the platform. It rebalances every month or so using investor sentiment data, which makes sense given that eToro is the leading social investing platform. How do we differentiate versus traditional financial information sources is a good question. And the data is very different, right? And so, a lot of it's the same. Right. Mm-hmm. Market data, which is market data means pricing data, pricing and volume and stuff like that. That data is also more derivatives data, which is like, futures and options data. A lot of that is the same. News is the same, but it's really taking, what we focus on is taking things that are crypto native, but making them feel digestible to traditional investors. So for example, when we think about news in crypto, mm-hmm. We think about how does news kind of look like corporate actions in the traditional capital markets, in traditional capital markets. So a corporate action would be things like a dividend, a stock split, things like that. For us, a dividend isn't too dissimilar to a hard fork, right? And a stock split is, like a token burn, right? And so there's similar ideas. There's similar ideas here, right? But in terms of how we differentiate from a traditional, I mean, we're crypto, right? So everything we do is crypto native, running blockchain data, stuff like that. I mean, happy to go into it in more depth, but trying to keep it more high level as opposed to
No,
getting into the complexities of differences.
no, I like it. It's very crypto native. I like that. I think there's one thing that you said that's very interesting to me is the sentiment analysis. I mean, how do you go about doing that? Is it like a bot that's like you have an algorithm that's kind of going through Twitter and Discord and all these places to figure out what the sentiment is of a particular asset?
Yeah, so we have we have a number of different sources of sentiment. So with Twitter, we actually have the full API, so the full fire hose of data. We also look at TikTok data actually now. I think we're the first company ever to do that.
Nice.
We look at YouTube data, Reddit. We now look at 4chan data. The way that we kind of go about scoring sentiment is we ingest all of that data. In the case of Twitter, we ingest 1 billion tweets a day just from Twitter. That's just the raw data we take every day from Twitter. And what we have to do, the first step and the most important step, is to actually assess whether or not that information is relevant to a particular asset. And that may sound simple, but it really isn't.
Right.
Take, for example, IOTA. IOTA is a cryptocurrency, but every sorority has the name. There's Kappa Alpha Iota, Theta Iota,
Right.
Mu, all these random sorority names, right? And so there are all sorts of different issues, like ETH was Ethereum, but it was the ticker of Ethan Allen until they changed it, right? And so you have all these avalanches of crypto, but it's a generic word. You could have an avalanche in Colorado,
Right.
and that could be being talked about on Twitter. So our first step is actually to assess whether or not the information is relevant to a particular asset. The next step is to try to identify whether or not the account producing that particular, you're sharing their belief or their insight is actually a real account. I mean,
Right.
one of the biggest challenges in crypto is bot activity, right? And in
Yes.
some cases, 90 to 95% of messages on a particular asset can be coming from bots. And so there's about a 14-step process that we have. And we basically have a proprietary natural language processor, and we score every single word in every tweet individually or every message individually. So for example, if we see a message, Bitcoin to see surge in OTC trading volume after, we're in the Bahamas, the governor of the Bahamas announces that they're buying $1 billion. Let's just say that
Right.
hypothetically happened. We'd score the word surge and buying positively. And what we do is we basically score every word in every message. And what we do is we normalize all the data on a per asset basis, which means we compare data on Bitcoin, for example, over the last hour versus the previous 24 hours. Because, for example, if you tried to compare how positive or negative investors were on Bitcoin to Dogecoin, that's really misleading because everyone's always going to be more positive on Dogecoin than they are on Bitcoin. And so what you do is you try to normalize the data on a per asset basis. So it's are investors becoming increasingly more positive or increasingly more negative about a particular asset?
Man, that's a very, very good answer. I appreciate you kind of going into the details there because I've always wondered how these sentiment analysis are generated. So that was a great answer. You really nailed your pitch there. I was looking through your website, and it's a great website. I highly recommend people check it out. And you had something on there, a really great chart about correlation and causation. And you had a great example was the Nicolas Cage films versus the number of people who drowned in a pool, which I didn't know this was a thing, but now I'm like suspicious about it. We have a chart right there. Actually, we're showing up on the feed. So obviously, not all correlation.
I haven't even
causation.
seen that. Somebody must have produced that research.
Oh, whoever did, give him a shout because it's really good. It's obviously not all correlation equals causation. So my question is like, how do you know when correlation does in fact equal causation, and you can start generating data and providing guidance because of it? Like, how do you what processes do you guys do, or what do you guys look at?
I mean, to be honest, I hire a ton of PhDs in math from the top universities in the US, and I let them figure that out. That's part of how I do it, right? Is I hire people that are way smarter than I am. But it's a hard question, right? And so, a lot of what we'll look at, for example, when trying to look at correlation versus causation, is the fact that when you try to look at whether or not a data point moved a particular asset, one thing that you have to understand is how correlated assets are to one another. So, for example, there could have been a news story that Algorand did something, right? And then Algorand goes up 7%. But if the rest of the market goes up 9%, that story probably didn't cause Algorand to go up 7%. The rest of the market caused the asset to go up 7%. And so a lot of what we look at is measures of dominance, right? So I'm sure some of your audience may have heard of Bitcoin dominance, which is the percentage of market cap that Bitcoin accounts for. But, in our case, we look at things like trading volume dominance, or social volume dominance, or on-chain dominance, or news volume dominance. So what percentage of a particular thing does that asset account for? And so when we see a particular piece of information, does a metric as compared to the rest of the market change significantly? And that's a really good way to start addressing the question.
No, that's awesome. That's awesome. And again, just to keep the lawyers off my back, I want to make sure that this is not investment advice. We're just, people need to make their own decisions based on their investment theses. But we're just kind of having a conversation here. I'm gonna wrap with this question. I want to thank you again for taking the time. I'm gonna wrap with this question. You're in the space now. You're deep in the space. What is something that you're excited about in the future of crypto that the general public, who's maybe just a general viewer, may not be so hip on?
Yeah, something I'm excited about that the general public may not be so hip on. Probably not the most exciting thing to the general public, but I'm very, very excited for industry consolidation and M&A. So I think there's going to be a ton of, we're a picks and shovels infrastructure business for institutions, right? That means we build the shit you guys are never going to see, you're never going to look at, right? We're building the infrastructure, the platform that institutions are building on top of. And so from an infrastructure perspective, you have things like custody. A custodian is like your bank. They hold your assets.
Mm-hmm.
You have prime brokerage, you have prime services. So trading and lending and other things for institutions. And I think, within, I'm not suggesting that with what we have, but across the board, I think there's going to be a lot of consolidation. I think a lot of companies are going to be buying other companies and merging together. And I think it's a really exciting time to be obviously we're just institutional, but from a consumer perspective in crypto, there's a ton of competition now, which is great because as a consumer, you're going to be, platforms are going to be forced to build the best products and services,
right,
which is awesome.
Absolutely. You're absolutely right. A lot of great competition, a lot of people building great stuff. Hey man, I really appreciate you. Thanks again for coming on, taking the time from the Bahamas. Go enjoy that sun out there. Go have some fun, and hopefully we'll get to talk to you again soon.
Yeah, thanks for having me on. Appreciate it.
All right, thank you. Bye. Hey, thanks for watching, everybody. Be sure to like, subscribe, hit that notification bell, and be sure to tune in tomorrow.